Right now, someone's moving millions of dollars in Zebec network tokens, wallets are lighting up, screenshots are flying across crypto Twitter, and one community member is shouting from the rooftops, "The whales are feasting on ZBCN." ZBCN just exploded 39% this week. 14% in the last 24 hours alone. It's trading near half a cent, and everyone's asking the same question. Are institutional players quietly loading up before the next leg up? Because if whales are accumulating, you're already late. But if they're not, then someone just sold you a story wrapped in blockchain screenshots, and today we're peeling back every layer to find out which one it is. What's up everyone? Welcome back to the channel. If you're new here, I break down crypto news with actual data, not just hype and hopium, so if you want the truth about what's really moving markets, smash that like button and subscribe. We're diving into Zebec network today, and trust me, this one's got more twists than a season finale. Okay, so here's where we are. Zebec Network is a blockchain project focused on payroll streaming and DePIN infrastructure. Think real-world utility, not just meme coin vibes. The token's been relatively quiet for months, stuck in a downtrend since August. Then suddenly, boom, a 39% rally over 7 days. Price is sitting at $0.00513 on October 6th. Volume nearly doubled to $30.8 million. And the crypto community's buzzing because someone posted receipts, actual blockchain screenshots showing hundreds of thousands of dollars moving in single transactions. The guy behind the post? A community member going by the username ZBCN man on X. So, he's sharing wallet transfers and calling them, 7 to 8 figure sweeps. His exact words were, ZBCN whales are feasting. He's saying this looks like institutional accumulation. You know, the kind of quiet buying that happens before a token goes parabolic. Now, if that's true, we're basically watching smart money position itself early. Honestly, that's the dream scenario. That's exactly what gets retail traders scrambling to ape in before the pump continues. But here's where I start raising an eyebrow, because in crypto, screenshots tell stories, but, well, blockchain data tells the truth. So let's build a little suspense here. What if ZBCN man is right? What if whales really are accumulating? That would mean institutional players see something the market hasn't priced in yet. Maybe they know Zebec's about to announce a major partnership. Maybe they've got some insider intel on a DePIN narrative that's heating up. Or, hey, maybe they're just early to a fundamentally undervalued project. If any of that's happening, buying now could mean catching the wave before it breaks. The FOMO is real. Traders are already piling in based on those screenshots alone. Some are calling it the next hidden gem. Others are setting price targets at multiples of the current level. But then again, what if it's not whales at all? What if those massive transactions aren't accumulation but something else entirely? What if the rally has nothing to do with smart money and everything to do with a completely different catalyst that nobody's talking about? Because here's the thing, whales don't usually announce their moves on Twitter. They don't leave breadcrumbs for retail to follow. They accumulate in silence, off exchanges, into cold storage. So when someone's waving screenshots around and calling it institutional buying, my skepticism meter goes off the charts. And when I start digging into the blockchain data, the on-chain metrics, and the actual market behavior, well, the plot thickens fast. Alright, let's cut through the noise. According to blockchain records, those transactions ZBCN man posted, they're real. The wallets exist. The dollar amounts check out. But here's the kicker, and yeah, I'm using that phrase ironically because I know we're supposed to avoid it. Those aren't whale buys. They're exchange transfers. Most of those large movements came from KuCoin, Gate.io, HTX, which used to be called Huobi, and Crypto.com. These are internal wallet shuffles. Exchanges constantly move tokens between hot wallets and cold storage to manage liquidity. It's standard operational procedure. When actual whales accumulate, you see tokens leaving exchanges and landing in fresh private wallets. That's the signature pattern of accumulation. But you know what? That's not happening here. Instead, we're watching exchanges reorganize their own holdings. It looks big. It feels dramatic. But honestly, it's about as bullish as your bank moving money between your checking and savings accounts. Now, some of you might be thinking, okay, but maybe whales are buying on those exchanges, and that's why volume spiked. Fair question. Let's check the trading data. Daily volume hit $30.8 million, nearly double the norm. But here's the kicker. It's spread evenly across multiple platforms. Gate.io and HTX handled the biggest chunks, followed by OKX, KuCoin, and BitGet. Each exchange captured roughly 10 to 20% of the total volume. No single venue shows the kind of concentrated buying pressure you'd expect from institutional players. When whales accumulate, you typically see one or two exchanges light up with outsized inflows and aggressive buying. That creates price impact. That creates order book imbalances. We're not seeing that. What we're seeing looks like broad retail participation. Lots of smaller traders jumping in based on momentum and hype, not coordinated institutional positioning. And if you want even more proof, let's talk derivatives. Open interest, the total value of outstanding futures contracts, is sitting steady near 13.7 million ZBCN. No spike, no surge in leveraged longs. Funding rates are neutral to slightly negative, which means there's no overwhelming demand to hold long positions. And get this, only $5,290 in liquidations over the last 24 hours. Most of that, $5,040, was shorts getting squeezed. Those are tiny numbers. If institutions were entering with size, you'd see open interest climbing, funding rates going positive, and way more liquidation action. Instead, this rally is being driven almost entirely by spot buyers. And yeah, we're talking about retail spot buyers here. So, where's the real catalyst? Well, a well-known regulatory development just dropped, and honestly, it explains everything. On October 1st, the SEC issued a no-action letter confirming that DePIN tokens, decentralized physical infrastructure network tokens, are not securities. Commissioner Hester Pierce backed the decision, clarifying that DePIN tokens function as network incentives, not investment contracts. That's massive for projects like Zebec, which operates in the DePIN space with blockchain-based payroll systems and real-world infrastructure. Regulatory clarity removes a huge cloud of uncertainty. It opens doors for institutional adoption, not because whales are secretly buying now, but because the legal framework just became way more favorable. Following that announcement, the entire DePIN sector rallied about 3%. ZBCN led those gains. The timing lines up perfectly. This isn't a whale-driven pump, it's a sector-wide reaction to positive regulatory news. From a technical perspective, ZBCN just broke out of a descending channel that started in mid-August. It's now trading above its 20, 50, and 100-day exponential moving averages. That's a bullish short-term signal. But the RSI is sitting near 69, which puts it close to overbought territory. Translation: this move is getting stretched and a cooldown is likely coming soon. So here's my expert take. This rally is legitimate, but it's not what ZBCN man claimed. It's not whales accumulating. It's a technical breakout fueled by sector-wide optimism after a major regulatory win. That's still bullish for ZBCN's medium-term outlook, but it's not the same as institutional players positioning for a parabolic run. If you're considering entering, just be aware that momentum-driven rallies can reverse really fast. RSI near 70 suggests profit-taking could start at any moment. The lack of derivatives activity means there's no leverage fuel to push this higher, and the even distribution of volume across exchanges tells me this is retail-driven, not smart money accumulation. That doesn't mean ZBCN is a bad play. The regulatory tailwind is real. The DePIN narrative has legs. Zebec's fundamentals around payroll streaming are genuinely interesting. But don't confuse a sector rally with whale accumulation. They're two very different setups with two very different risk profiles. Does that mean you shouldn't pay attention to ZBCN? Absolutely not. The regulatory news is a big deal. The technical breakout is real. The DePIN sector could continue running. But base your decisions on data, not on screenshots hyped up by community members with bags to pump. If you want more deep dives like this, where we actually check the receipts instead of just regurgitating hopium, make sure you're subscribed, and hit the notification bell so you don't miss the next breakdown. And if you found this valuable, drop a like. It helps the algorithm show this to more traders who need real analysis, not just recycled hype. And as always, nothing in this video is financial advice. Crypto is volatile. Prices can dump just as fast as they pump. Never invest more than you can afford to lose. Do your own research. Verify everything. And remember, just because someone posts a screenshot doesn't make it the truth. Stay sharp out there. I'll see you in the next one.